Welcome back to the deep dive. Today we're looking at a company that is essentially the grandfather of the internet economy.
Yeah, a digital dinosaur that has somehow,
Mhm.
refused to go extinct. We're talking about eBay.
Right. And look, I know exactly what you're out there thinking. You are thinking about um, Beanie Babies or dial-up internet modems making that screeching sound.
Oh, yeah, or maybe a weird used toaster you bought in, like, 2004.
Exactly. But we really need to shatter that mental image today. We're breaking down their Q4 2025 earnings report, which just dropped on February 18, 2026.
And the headline here isn't just that they're still alive, it's that they are actually,
Modern.
yeah, modern, maybe even a little bit cool.
I don't know how I'd go that far.
Well, I'd hesitate to use the word cool just yet, too. Let's not get carried away. But they are certainly profitable, and they're making some incredibly aggressive moves.
For sure.
I mean, we aren't just talking about selling used junk anymore. We are talking about a billion-dollar acquisition, a complete overhaul of their tech stack with AI, and a massive strategic pivot to what they are calling re-commerce.
And the markets seem to really like it. Because looking at these numbers, they didn't just meet the bar, they cleared it.
They did.
Which is surprising because usually, these legacy tech companies are just trying to keep the lights on while the NVIDIAs of the world take all the glory.
That is the narrative, definitely. But eBay is mucking it. In an economic climate where a lot of e-commerce is struggling just to find growth, eBay beat expectations on both the top and bottom lines.
Let's get the raw numbers out of the way first so we can get to the strategy. What exactly are we looking at here?
So the headline numbers. Non-GAAP earnings per share came in at $1.41.
Okay.
The street was expecting $1.35. That is a 6-cent beat, which in the game of quarterly earnings is significant.
Yeah.
And on revenue, they pulled in $2.97 billion, beating the consensus by over $90 million.
$90 million is a very healthy cushion. But the metric I really want to dig into is GMV, gross merchandise volume.
Right, the crucial one.
I feel like this term gets thrown around a lot. But for you listening, if you aren't glued to Bloomberg terminals every day, can you give us the sort of explain, like, I'm 5 on GMV versus revenue? Like, why do we care about both?
Sure. It's a crucial distinction for any marketplace. GMV is the total dollar value of absolutely everything sold on the platform.
Got it.
So if you sell a vintage Omega watch for $5,000, that is $5,000 of GMV. But eBay doesn't keep that whole $5,000.
Right, they take their cut.
Exactly. They take a cut for transaction fees. Maybe you paid to promote the listing, the shipping label cost. That cut is their revenue.
Okay, so GMV tells you how busy the mall is, and revenue tells you how much rent the mall owner is actually collecting.
That is a perfect analogy. GMV is the health of the ecosystem. Revenue is the health of the business model. And interestingly, their GMV grew nearly 6% for the full year to about $80 billion.
6% doesn't sound like a rocket ship, though.
For a mature company like eBay, it's huge.
Really?
You have to remember, for a long time, eBay's GMV was flat or even shrinking. They were bleeding market share to Amazon, to specialized sites like StockX, or just losing to general disinterest.
Yeah, that makes sense.
So seeing 6% growth here is a signal that the ship has actually turned.
So the mission for this deep dive is to figure out how they turn the ship. How does a 30-year-old company reinvent itself?
That's the big question.
We are going to talk about magical listings, which I have to say is a very confident name for a feature.
It's extremely bold branding, yes.
We're going to talk about their acquisition of Depop, which is a massive play for Gen Z, and I definitely have some questions about the price tag there.
We will get into that.
And we are going to look at the weird stuff happening in their financials, like why everyone is suddenly buying gold bars on eBay.
Ah, yes, the gold rush anomaly. We definitely have to discuss that because it distorts the financial picture a bit.
But let's start with the tech, because if you're going to call something magical listings, it better actually be magic. What is the core problem they are trying to solve here? Is it just that people are lazy?
The problem is friction, pure and simple. Think about your own house right now. You probably have a closet or a drawer or a garage full of stuff you just don't use anymore. Old phones, clothes that don't fit, maybe some collectibles you inherited.
Oh, I have a box of cables that I'm pretty sure dates back to the Obama administration, and an old DSLR camera I haven't touched in at least 5 years.
Exactly. Everyone has that box. CEO Jamie Anand dropped a stat on the call that frames this perfectly. He said the average household has about $4,000 worth of sellable items just lying around.
$4,000 just sitting there.
Just gathering dust. But here is the kicker. Less than 20% of that inventory is actually online.
Why is that?
Because listing is a massive pain. You have to take 10 perfect photos, write a catchy description, figure out if it's an iPhone 11 or a 12, weigh it, measure the box, and then try to guess the price.
It's homework. And nobody wants to do homework for $40. I would rather just leave it in the closet.
Precisely. That is what economists call latent supply. It exists, but it is trapped behind a wall of effort. So Magical Listings is their answer to break down that wall. It's an AI-native flow.
Walk me through it. I open the app, I see my old camera. What happens?
You take one photo, just one, and their computer vision AI analyzes the image. It doesn't just see a camera. It identifies it as a Canon EOS Rebel T7 with an 18-55mm lens.
Wow, from one photo.
From one photo. It writes the title, it selects the exact category, it fills in the specific details like megapixels and condition based on visual cues, and then, crucially, it suggests a price based on what similar items recently sold for.
So it's not just a spell checker or a text generator. It is visually understanding the physical object.
It's doing all the cognitive load, it completely removes the decision fatigue, and the results are wild. They rolled this out to mobile users in the US, and they found listing time was cut by over 25%.
Which is great. Efficiency is nice. But does it actually make people sell more stuff? Or do they just spend less time on the app doing the same amount of work?
That is the real metric to watch. The new listing creation rate went up by over 50%.
50%. Okay, so that validates the thesis right there. If you make it easy, people will actually sell that box of cables.
And customer satisfaction is sitting at 95%. It is effectively unlocking that $4,000 of closet liquidity we talked about.
Closet liquidity is a fantastic phrase. I'm absolutely stealing that. But they aren't just using AI for sellers, right? They talked about something called agentic search for buyers. This sounded a bit more sci-fi to me.
It is the other side of the coin. Traditional search is keyword-based. You type red Nike Air Jordan size 10, but if you type cool sneakers for a basketball game, traditional search fails.
Why? Yeah.
It doesn't know what cool means. It just looks for the word cool in the seller's description.
So you end up with a pair of shoes where the seller wrote cool shoes in the title, even if they're objectively terrible.
Exactly. Agentic search uses large language models to understand intent. It is much more like walking into a high-end boutique and talking to a sales associate. You can say, I'm looking for a vintage leather jacket that gives off a Top Gun vibe but fits a smaller frame.
And the AI actually understands Top Gun vibe.
Ideally, yes. It translates Top Gun vibe into bomber jacket, shearling collar, brown leather, patches. It understands the context of the request.
That's fascinating.
For a platform like eBay, which has millions of unique, non-standard items, one-of-a-kind vintage pieces, this context awareness is the holy grail. It helps buyers find the needle in the haystack without knowing the exact technical terminology.
It really shifts the experience from just searching to actually shopping.
Correct. And that keeps people on the app longer, which directly increases the likelihood of conversion.
Okay, so we have AI unlocking the supply and AI smoothing out the demand. But this tech isn't being applied to just anything. eBay isn't trying to be Amazon anymore, are they? Like, they aren't trying to sell me toilet paper and AA batteries.
No, and honestly, that realization is what saved the company. A few years ago, they pivoted to what they call focus categories. They realized they simply cannot beat Amazon on speed or commodity pricing. If you need toothpaste tomorrow, you go to Amazon. eBay cannot win that war.
So where does eBay win then?
They win on the weird stuff, the rare stuff, the enthusiast categories, luxury watches, refurbished electronics, auto parts, collectibles, sneakers.
And according to the report, these focus categories, along with C2C, the consumer-to-consumer side, and re-commerce, now make up about 2/3 of their entire business.
That is a massive shift in their core identity, and I really want to double-click on that word, re-commerce.
Re-commerce, it sounds a lot like marketing speak for used stuff.
It is, but it is used stuff with a serious narrative upgrade. It refers to pre-loved, refurbished, or vintage goods. That segment alone is now over 40% of the platform's GMV. eBay is effectively positioning itself as the infrastructure engine of the circular economy.
They leaned pretty hard into the environmental angle in the earnings report, too.
They did. They exceeded their 2025 impact goals. They generated $25 billion in positive economic impact from pre-loved goods. And this is the big number. They avoided over 8 million metric tons of carbon emissions.
See, that is interesting because buying used to be purely about saving money. I can't afford the new one, so I will buy the used one. But now, for Gen Z especially, It seems like a value statement. I am buying used because it is sustainable.
Precisely. It is status signaling. Wearing vintage isn't just cool, it shows you care about the planet. It completely changes the psychology of the purchase.
Let's talk about a specific focus category because the tech here is just cool. Trading cards.
Oh, the ultimate enthusiast market.
I feel like trading cards are the perfect case study for this entire strategy. If you are a collector, you are obsessive. Condition is everything. You aren't just buying a Charizard. You are buying this specific parallel version with this exact centering in this specific condition.
And the friction there used to be immense. Listing a card meant researching, what is this variation? What is it worth? How many are there?
And they launched a tool to fix that.
They did. An AI scanning tool trained on over 40 million card images.
40 million.
Yes. In Q4 alone, users scanned 15 million cards. You point your phone at the card, and the AI identifies the exact player, the year, the set, the parallel variation. It pulls up historical pricing and, this is key, population data.
Population data. What does that mean in this context?
It tells you how many of those cards actually exist in that specific grade worldwide. That is crucial for investors. It tells you exactly how scarce the asset is.
That is instant expertise. It used to take hours of research on forums to figure that out.
And that is the moat. If you are a serious collector, why would you list on a general marketplace like Facebook Marketplace when eBay gives you that level of data and specificity instantly? It locks the enthusiasts in because the tool is just objectively better.
Speaking of locking in a demographic, we have to address the elephant in the room, or rather, the cool kid in the room, the acquisition. eBay is buying Depop.
Yes. This was a blockbuster news of the report. eBay has entered a definitive agreement to acquire Depop from Etsy for approximately $1.2 billion in cash.
Okay, stop right there.
Yeah.
1.2 billion. For those listening who are maybe over the age of 35 and don't know, Depop is that app where cool teenagers sell their vintage clothes to other cool teenagers, right?
That is a reductive but fairly accurate description. Depop is a peer-to-peer social shopping app. It looks less like a traditional store and much more like Instagram. It's extremely visual, very trend-driven.
But $1.2 billion, that seems like a massive premium. I mean, my niece uses it, but does it actually make money?
It does generate revenue, but you have to look at why eBay is buying it. They aren't just buying the revenue, they are buying the audience. Depop's audience is overwhelmingly Gen Z, people under 34.
Right, and eBay has historically skewed older. Boomers and Gen X love eBay.
Exactly. If eBay wants to survive another 30 years, they need the kids.
Yeah.
And the kids are on Depop. Depop grew nearly 60% year over year in the US in 2025. In retail, 60% growth is basically unheard of. It generates about $1 billion in annual gross merchandise sales.
Okay, so the growth is very real. But is it worth the price tag? Couldn't eBay just build their own cool app for less than $1 billion?
They could try, and they have tried in the past, but building a community is infinitely harder than building software. Think about customer acquisition cost, or CAC. For eBay to market itself to Gen Z, to convince a 19-year-old that eBay is suddenly cool, would cost a fortune in advertising, and it might not even work.
Because brands cannot just decide to be cool, it has to be organic.
Exactly. So instead of burning cash on marketing that might fail, they are buying a community that already exists. It is a shortcut. Plus, look at the flywheel. On Depop, over 1/3 of the buyers also list products. It's a very fluid economy. You buy a shirt, wear it for Instagram, sell it 3 months later to buy pants.
So eBay sees synergies here then.
Huge synergies. Depop has the cool factor, but they lack the plumbing. Logistics, fraud protection, cross-border shipping, authentication. eBay has 30 years of infrastructure built to handle payments and shipping globally. If they can plug Depop into eBay's engine, they can scale that app much faster and more profitably than Depop ever could on its own.
So eBay is the boring but reliable parent, and Depop is the wild teenager, and together they make a functional family.
That is the hope. But it does come with a cost. The CFO, Peggy Alford, was very transparent on the call. She said this deal will be a low single-digit drag on earnings in 2026.
Meaning they are going to lose a little money on it initially.
Right. Integration costs, marketing, tech migration. But they expect it to be accretive, meaning it actually adds to the profit by 2028. This is a long-term play. They are sacrificing a bit of today's profit to ensure they are relevant in 2030.
Which, frankly, is what you want a company to do. You don't want them squeezing every penny today and dying tomorrow. Now, let's zoom out to the broader financial picture, because there was a really weird dynamic in this report. It felt like a tale of two markets.
It really was. We saw a massive divergence between the U.S. and international performance. The U.S. was on fire. GMV grew nearly 19% in Q4. That is incredible growth for a mature market.
19% is massive,
Hmm.
but international.
International GMV actually declined by about 1%.
That's a huge gap. 19% up versus 1% down. What is happening across the pond?
It's a mix of macroeconomics and policy. Europe, specifically Germany and the UK, is in a much tougher economic spot right now than the US. Consumer confidence is low, people are tightening their belts. But there is also a policy angle that we really need to unpack, the de minimis crackdown.
Okay, de minimis. I keep hearing this term in the news regarding trade wars. What does it actually mean for a regular shopper?
De minimis is a customs rule. It basically allows small packages, usually under $800 in the US, but the threshold is much lower in Europe, to enter a country without paying duties or taxes. It was designed so customs agents wouldn't have to inspect every single souvenir postcard or small gift.
But now it is being used by companies like Shein or Temu to ship cheap stuff directly to your door tax-free.
Exactly. And governments are closing that loophole to protect local businesses. As those exemptions vanish, it becomes much more expensive to ship goods across borders. If you buy a vintage jacket from a seller in the UK and suddenly you get hit with a 20% tax bill upon delivery, you probably won't do it again. That friction is actively hurting eBay's international trade volume.
Got it. But the U.S. was up 19%. Surely that is not just because we love spending money.
We do love spending money, but there was an anomaly here. Management actually called it a sugar high in the fourth quarter.
A sugar high. That implies a crash is coming, or at least that it's not healthy energy.
Exactly. A significant chunk of that U.S. growth came from a surge in gold and bullion.
Wait, people are buying gold bars on eBay?
Oh, absolutely. You can buy gold bars, silver coins, precious metals. And in Q4, with global instability and inflation fears, people flocked to safe haven assets. eBay happens to be a trusted marketplace for that.
But why is that a sugar high? Revenue is revenue, right?
Yeah.
If I sell a gold bar or a car or a comic book, eBay gets paid.
Not exactly. This is where the business model gets tricky. Selling a gold bar creates high GMV, let's say $2,000 for an ounce, but it generates very low revenue for eBay. They cannot charge a 13% final value fee on a gold bar, or nobody would ever sell it there. The margins on bullion are razor thin.
Ah, I see. So it pumps up the GMV number, the vanity metric, but it doesn't actually feed the bottom line as much as selling a pair of sneakers would.
Correct. It is empty calories. And management was very honest about this. They flagged it as less durable. They are telling investors, look, don't expect 19% growth every quarter. A lot of this was just a gold rush.
I appreciate the honesty, actually. Usually companies try to hide that stuff and pretend everything is structural, permanent growth.
It builds credibility. It shows they understand the drivers of their own business.
One area that definitely isn't a temporary spike, though, is live shopping. eBay Live. I've seen this. It is like QVC, but on your phone, and usually with younger, cooler hosts.
It is exactly QVC for the TikTok generation.
Uh-huh.
And the numbers here are startling. The run rate is 7 times higher year over year.
7 times.
Exponential growth. They mentioned one single event on Black Friday that generated about $2 million in sales.
$2 million in one live stream. That is wild.
In just a few hours.
But play devil advocate for me here. Why does this work? I can just browse the photos on the app. Why do I need to watch a guy holding the shoe? It feels inefficient.
It is about trust and urgency. If you are buying a $5,000 Hermes bag or a rare comic book, seeing a static photo is one thing. But watching a verified expert handle it, open the zipper, show you the stitching in real time under a bright light, and answer your specific questions in the chat, that builds massive confidence.
It creates a real connection.
Plus, the auction format creates serious FOMO, fear of missing out. You have to bid right now. It gamifies the spending.
It turns shopping into entertainment.
Exactly. And they are expanding this rapidly. Germany, Australia, France, Italy. It is moving from an experiment to a core pillar of how they sell luxury and collectibles.
So putting it all together, 2026, what are they telling us to expect?
The guidance is solid. For Q1 2026, they are projecting revenue between $3.00 and $3.05 billion. That implies GMV growth of 10 to 12% on an FX-neutral basis.
Double-digit growth for a legacy player is nothing to sneeze at.
It's impressive, and they are backing it up with cash. In 2025, they returned about $3 billion to shareholders through buybacks and dividends. For 2026, even though they are spending $1.2 billion in cash to buy Depop, they still plan to buy back another $2 billion in shares.
That is a flex. They're basically saying we are so profitable we can buy $1 billion company and buy back our own stock at the exact same time.
It signals massive confidence in their cash flow. They also raised the dividend by 2 cents to 31 cents per share. They're telling the market we can fund growth and reward you for holding the stock.
There was a small note about accounting changes. I know eyes tend to glaze over at the word accounting, but does it actually matter here?
Briefly, yes. Starting in 2026, they are changing how they account for software costs, expensing them immediately instead of capitalizing them over time.
What does that mean in plain English?
It means their profit margins might look slightly lower on paper next quarter, but it's just a math change, not a business change. It is moving the money between buckets. Savvy investors just need to know so they don't panic when the margin percentage dips slightly on the spreadsheet.
Good to know. Don't panic, it's just the accountants doing accountant things.
Exactly.
So let's wrap this up. We have covered a lot today. eBay is clearly not sitting still. They are pivoting from a general garage sale to a high-tech, enthusiast-driven platform for the circular economy.
They've really found their identity. They aren't Amazon Lite anymore. They are the place for the good stuff, the rare stuff. And they are building the technology, AI listings, scanning tools, live shopping, to make moving that stuff easier than ever.
And they are using that massive cash pile to buy the future via Depop. Feels like a very balanced strategy.
It is a mature strategy. They are managing the decline of the old eBay, the new toothpaste and batteries, while actively fueling the growth of the new eBay, the sneakers, watches, and Gen Z fashion.
Which brings me to a final thought for you listening to chew on. We talked about agentic commerce today. AI buying and AI selling. As these agents get better, they will start writing the listings, negotiating the price, finding the items, and maybe even clicking buy for you.
It is the ultimate efficiency. Friction goes to zero.
But here is the existential question. If the AI does the shopping and the selling, what happens to the thrill of the hunt? A huge part of the original eBay culture was digging through pages of junk to find that one absolute treasure, that dopamine hit of finding the mislabeled auction.
That is very true. Discovery is a huge part of the joy.
If an agent just serves it up to you on a silver platter, does removing the friction also remove the fun? Are we optimizing the joy right out of the experience?
That is the big question for the future of commerce. Do we want efficiency or do we want adventure?
Something to think about the next time you ask an AI to find you a vintage leather jacket. Thanks for diving deep with us today. We will catch you on the next one.